So you guys can see, I I trade my funded futures, and I've been trading on two different strategies. I trade the BD, and I also trade a market open breakout strategy. So as you can see, I had my best week ever, and I'm about to pass this account, right? This was a bad risk management loss, right?
Yeah.
But I take one trade in the beginning of the market, and you can see that on this, I took two trades, right? This is partially because of the market open trade I took, and I also took a BD trade. And then for here, this was two break evens, and then this was two wins from the BD, right?
Yeah.
So I'm doing very well, right? And I have stopped trading the blue alerts usually because like I just haven't been trading it. I've been focusing on my strategy, right?
Yeah.
So I took a look in your free channel. I was like, dang, how is he winning every single day, right?
Yeah.
And
Yeah.
if you guys aren't in the group, right, just make sure to join the group. Make sure to get all these because they are super legit. All of these results are legit, right? You can trust Jamie.
Yeah.
But basically, what I did was I made it a short rule set, right? And I'll just explain that right here. So I think I sent it in the blue alerts channel, right? So yeah, so I've seen a lot of people, they use the Haikanashi, right? And I looked through all of the images and I saw that a lot of people were saying Haikanashi is better, right? And I agree with this because it has a more average amount of price. So you only see like the real moves. You don't see a lot of the wicks.
Yeah.
If you can just see this
No, I,
for
this is the reason why I changed to Heiken because
yeah.
when we first started noticing the alerts, for some reason they just seemed to be better on
Yeah.
Heiken.
So yeah. And first off, you want to do the Haikanashi and you want to take a double blue, but it can be a normal blue. So I'll give you guys an example of this. So this would be a straight loss because as you can see here, this is for me 11 p.m. Right? It's not very high volume. It is Asia, but you would have lost this obviously, right?
Yeah.
But I'll show you a win that I want to highlight. So this right here, you can see it isn't a double blue because you have this right here, and I use a five minute because I've seen that works a lot better. So here's why I would have taken this one, right? And this is only 5 seconds. So a lot of people have been covering the 15 second, but I noticed that you can use the 5 second and it works very, very well.
Yeah.
So as you can see, if you know basic trend structures, you have a downtrend and you have some consolidation, right? You have just sideways movement. So you also see that the last signal we had was a 5 minute, right? And
Yeah.
that proves that we're still going down. So I want to take the first 5 minute on the other way. So you can
The
see,
5 minute on the other way.
so this is a sell, right?
Yeah.
I want to
Yes.
take a buy, the first buy we get. So
Okay.
you can see that we have been gone down for a while, and price didn't want to go this way,
Yeah.
right? I wouldn't have taken a sell here because you have no sell at the beginning of the trend, right? So you wouldn't have taken this. This is in the middle of it, and I would have taken this if there was an alert right here, right?
Yeah.
But there wasn't. So now this buy example, you can see it won. It was pretty well. But here's how I would manage it, because Jamie does something completely different. He just holds it. I don't really know exactly what you do, but what I've seen is that I've been also studying like a lot of concepts about liquidity and about different strategies, and I've combined all of these to make this work the best for me.
Yeah.
So you can see that I'll just show you guys. So right here, I'll show on the regular chart that these, if you don't know what these are. I'll just explain what I'm saying, but where would I even go? Right, but let's say this is the liquidity point, right? This right here, this high, price usually likes to gravitate towards it. So you can see that we're going down and we consolidate, whatever, and then we take this and then we go higher, right? Another example of liquidity point, and I'll just go to a random point, right? But you'll see that in this in this trend, we have a point of liquidity here, right?
Yeah.
And I can show you that even if say I had the entry right here,
Yeah.
but something like that. We'll just say we're in this. This is a trend, right? I'm gonna enter, and price will go to this point. Doesn't matter what it does. Look at that.
Okay.
So price will go to that point. It can also go here and here, but right here, price more times than it doesn't will like to grab these liquidities before it goes a certain way.
Yeah.
So you can see it grabs this then goes higher, right? And you'll see this example as well. We have some alert. I wouldn't take this, whatever, but you see that price wants to go here.
Yeah.
It goes here and then it rejects, starts to go higher. And then it'll probably go up to this high right here, and then go down, but we'll see. So now that brings me to what I was trying to say about the blue alerts, right? So I don't know where it is. Yeah. So let's find a, because I just lost my example, but we'll take this example
Yeah.
for instance. So right here, you would have entered because we have one. Where would go my Hikanashi? So we have one little area of. Oh, I guess this didn't work. So we'll go to another point. All right, this right here. So this is a good example of an entry that I would take, right? So you see that we've had a long downtrend, and this is risky because usually reversals are not guaranteed. Price will like to stay in that trend. The
Yeah.
higher time frame could still be going down, right?
Yeah.
But for an example, this is an entry that I would take because we're consolidating and we have structure right here, and it's a first pullback with the blue alert.
Yeah.
So how I would manage this, I would put this under.
You're taking this on futures, yeah?
Yeah, I take them on futures. You can take them on forex.
Yeah, yeah.
I actually have Jamie's saved. I have the
You have my template,
I
yeah.
see markets.
All right, yeah.
Oh, looks like I lost it. Damn it. Okay, but there we are. So you put if price wants to go down, here's my theory, right? And you can see it works. So if price wants to go in one direction,
Yeah.
and it will take out these liquidities. And what usually happens is when price goes down and there's two of these, it'll usually take the lower one. So it'll go down here, but then it'll also grab this before we do something like go down or go up. So I'll put my stop loss directly under, right here,
Okay, yeah.
not to the T, right? And then as you can see, we didn't go it, and then we grabbed it and then did whatever, we started to go down, right?
Yeah.
So once we took this, we just instantly fell down. We didn't go any higher. And we also took this one and we kept going down. So I would put my stop loss directly under there. And then for a partials, which I'm not sure I would get on this, but what I would do is I can't really see it well on this time frame, so I'm going to go to the 1 minute. But yeah, there's not much over here, but you can see how there's sort of a level right here. You see we like struggle and then we break past it. So this could be a point where these candles are, that this is sort of a level, right? So price will usually, like I said, it will usually at least go here and then do whatever it wants to do. So I'll take my 50% partials at this point.
Yeah.
And I'll be in the trade. And once we break a high, this is how I'd mitigate my loss on this trade. So once we break this high, since we have the theory that we like to go to this liquidity, once we break this high right here,
Yeah.
I'll immediately trail to the pullback. And I said this in my rules. We have so price can tap EMA. You can enter when price pulls back, and then stop loss directly under a high or low. It can be generous. So this is the generous I'm talking about, just to explain that.
Yeah.
This is kind of generous, right? You could put it over here or something, but you want to be a little bit generous on it because we usually like to play out, and if we want to go up, we'll mess around here, but if we want to keep going up, we're not going to take this
Yeah.
out, and we're going to go higher.
Okay.
So you put it a little bit generous, and then you start to trail your stop once price breaks through the low high of the pullback you entered on. So you don't lose as much money as you would when you entered. I did about an hour of back testing before I did all this, and I saw that if we want to go higher, we're not going to create a lower high.
Yeah.
So this would be a change of trend, right?
So
We go
that's
like
telling
this.
you to get out of that. At the,
Yep, it's telling me directly I'm going to get out. So I would, once we break this high, directly trail to here. I wouldn't go break even because I saw that when I was doing my charting that I actually took a loss because I went break even. And then I did some more back testing and I realized that if I don't just go break even from when I entered and I trail down here, I win a lot more times and we'll usually go to this high point.
okay.
We'll go higher and higher and higher. So I'll directly take my stop loss till the bottom or hot or low of the pullback, the high or low of the pullback I entered on.
Yep.
And if we go below it, as you can see, once we go below it, we just keep going down. We don't go any higher, and we take out these points.
Yeah, I'm with you.
So because we entered and we took out 50% when we say we did go up, now what we're doing is we're mitigating our risk, and we have a higher chance that we keep going higher if we take 50% out here and we wait and ride until we have, say, another point, like an obvious point of liquidity. So, yeah, 50% when price hits the first obvious liquidity point,
Yep.
which would be, there's not much over here, which is what I said, but you want to take 50% out and then set your full TP at a higher obvious liquidity point. So I think this is a little bit too high to target, right?
Yeah.
So another point that I could do is like something like this. I mean, it's pretty high, right? And we didn't really take it out. I mean, it's lower chance that we take it out, but if we do want to go up, we're at least going to go high enough to where we take all the sellers out, and then the buyers and sellers out, and then we start to go down. So we're at least going to go to this point before we go down, right?
Yeah.
That you trailed it, you've gone break even, and you've mitigated all your risks. So I'll remove these drawings and I'll go to a winning example. So I wouldn't take any of these, by the way, because it's in the middle of the trend.
Okay, so you average rate, you take the first pullback then.
The first pullback, right?
Yeah.
And I saw that I win a lot more when I have two structures, but I stopped trading this strategy as much because that two structure setup would show up so rarely when you had two structures like this. And this is the regular entry model, right, that you teach in your course. This would show up very rarely, and I get a decent win rate on it, but it just wasn't good enough for me.
Yeah, maybe.
So I tried to do something else, right? But this strategy is amazing. So let's see a win right here. So this is where I would say I would 100% take this. And by the way, when I'm entering this, I don't risk more than 1%. I keep the risk the same so I can actually have a better win rate. So let's see. What do? We go high. We go super high. And we have a big uptrend. Now we're consolidating. And I'm taking the first pullback of the downtrend.
Yeah.
So you can see this is a great setup because we do have two structures. And it is kind of condensed in, as you can see. But if we want to go lower and we have an entry model that shows us that we're going to go lower, we're going to go at least down here.
Yeah.
To this liquidity. Price will likely take this. And then if we want to keep going up, we'll take this out and then we'll keep going up, right?
Yeah.
It doesn't matter to me. I'm at least going to take my partials, right? So I'll show you how I'd manage this trade. You enter.
Yeah.
And then once we break this low right here,
Yeah.
I'm trailing. I'm not going break even because as you can see, if we decide to go break even and this was a little bit higher, you would have gotten stopped out. So you trail to the pullback's high and then you let it ride until, so I take out 50% here.
Yep.
And then I let it ride until another point. So this is pretty obvious to me, right?
Yep.
This is a bunch of stacked lows. And usually what we want to do, you could call it support, you can call it resistance, you can call it whatever, right? But this is an obvious point to me that we want to go to. So you're still in this, you've taken 50% out, and let's say this was at an initial, what is it? You've initially taken out, say you risked 1,000.
Yep.
You've initially made about, what is that? I don't know, like 700 or something,
Yep.
right? Just from taking 50% out, and now you're trailing. So now you have another 700 or so that can turn into, what is that? Like 2 grand or so.
Yeah.
So you're going to take this all the way down until this point. Now let's see what happens. Still going to go. And you can just hold. This is why you don't go break even. Okay. So, yeah, look at that. So we go higher, and guess what? This is why the theory is right.
Yep.
If we wanted to break this, this is the trend, right? We have a trend where we have a pullback here.
Yep.
If we wanted to go higher than this, that means we break the trend. And look what happens. We break the trend, and we go higher.
Yeah.
And we don't go to these lows. We start going higher and higher. So either we get all this profit or we get 700 profit and risk a lot less. So you're ending up with like, I don't know, 650 instead of a break even, because you could have got break even here or something if you decided to like trail because of fees or whatever. But yeah, that's basically it.
Sweet.
And I guess I can do one more example, but with this, the thing that's really interesting to me is the 5 second, because I remember seeing this and I was like, damn, how's Jamie trading on the 15-second time frame? And I realized that
And then you're on the 5.
I'm on the 5. So I'm realizing that this just shows up anywhere. It's like, if it's a whole story. If we want to go higher, then we're gonna pull back and we're gonna get a confirmation, because guess what? This doesn't count, right? But I'm using an example.
Yeah.
We're slowing down, where we have all of this on the high time frame showing us that we've slowed down, because on the 5 minute we have a MACD going up. The MACD is going up. We're slowing down. We're exhausted on the downtrend. And on the lower time frame, it's telling us that we want to go higher, because we're going. You can see the volume is telling us that we're starting to go higher. And then we're pulling back, which is telling us that we're going to exhaust the sellers, and we want to still go higher because we have an entry model with a bunch of the Mogwai signals.
Yeah.
We're going to have the alert coming up and the CCA line turning green, all that stuff. So it's literally like any time frame that this happens, it's just showing you that we're going to go up no matter what. So,
yeah. Okay. Yeah. Right. I've got to shoot anyway.
let's see what everyone's saying.
Oh no, they're asking about your trading SL, but I'm shooting anyway. But everybody, you're from America, yeah?
Yeah.
I'm with you.
And this is another one right here. So you see, I'd be generous on my stop loss,
Yep.
because if we go any lower than this, we're probably going to go down here. So there's no point of risking. Like I said, there's no point in risking too much, because if we go down here and we break it, we're going to go down here and we're probably going to go even lower. So that's why I don't trail like this. You might get stopped out. Like I remember seeing this one time on like London session where we did go like this and then we went back up, right?
Yeah.
But it's very rare. So I'd put my stop loss here, this liquidity. We have the entry.
Yep.
And I think it's even better confirmation if we reject. I remember initially seeing the rules that like it shouldn't touch the EMA at all. But if we reject, that means more confirmation to me that we're going to go up. So take here. And you see, this is a complicated example for trailing, but I would probably go like 50%. So hold on, let me just show you. So I go 50% here. And this is very obvious example.
Yep.
Where it's a good point. So I go 50%. And now the trailing is complicated here because we do have another pullback area right here. It's a little bit weird, but it's whatever. So I'd probably go just straight break even to this point, and then now we ride it until another point. So where would that be? I think this is pretty obvious. Another highs, like I was saying. The other one was lows, and this is highs that are stacked. So I go like this, and boom, we hit it. So
Well, sweet.
pretty simple.
Right, I'm shooting everyone. Right, so tomorrow 6 a.m. everyone. Yeah, don't be late. Live stream, blue alerts again. C Trader should hopefully be released, and we're rocking and rolling. And cheers for explaining that, Frank. That's good.
Yep, of course.
Sweet. Sweet. All right, I'll see everyone tomorrow. Take care.
All right.
See you later.